Hi guys, welcome back to Investing Cartel. So as you all know, we had quite a deep red candle on Monday and everybody was just freaking out, blasting sell, sell, sell all over social media, trying to create chaos. Not once did the price actually break the 20-day moving average. But when this red candle over here happened and many people were calling for blood on the streets and all this shit, we were all chilling, right? Kicking back, taking it easy, enjoying the ride. Because over this entire trend, this entire bull rally, the S&P 500 has been literally hugging its 20-day moving average at multiple points of contact. And I would like to point out right here, which is a nice thing to look at, we have officially broken this resistance. And as you guys know, heavy resistance has a high probability of becoming nice support when it is broken. So even if we do break down here, we have a very nice landing pad for another possible move up. Now, one thing I would like to point out is that the European markets seem to have had a great influence on the North American markets during this bull rally. And in one of my previous videos, we went over how when the Euro Stocks Index approached its 200 daily moving average and was rejected every single time, it had a direct correlation with the S&P 500. And we concluded that the S&P 500, as most of you are aware, is far above the 200 daily moving average, whereas the Euro Stocks Index has literally been stuck in a full-fledged battle trying to break this resistance. And you can see here, we got rejected once, rejected twice, rejected for a third time, and now finally, we've had our first close above its 200 daily moving average. Now, if we can hold our position above this 200 daily moving average and continue the staircase pattern, I would be of the mindset that this V-shaped recovery would be even more probable. But as we all know, if a stock is above its 200 daily moving average, it is theoretically bullish. And if it's below it, it is theoretically bearish. And this seems to have a very high toll on the psyche of the market, the psyche of the traders who make up the market. So I do think if we can hold above this 200 daily moving average, things are only going to get safer in my mind. Again, guys, as long as you're investing in good companies and not bags of shit. Good companies that you don't mind bag holding, that you know that they're eventually going to get you into profits. In this game, we make money by not being greedy. We create our success by being satisfied with our profits. One thing I'd also like to point out with this chart right here is what looks like as a nice bull flag forming, being sort of a slanted pole. So when you see this pattern forming here, now these sort of patterns generally do end up breaking to the upside, but the reality is it could break down either way, either direction. Most of the time, it'll break to the upside. Because as the stock's price gets squeezed and squeezed and squeezed, a lot of pressure builds up. And eventually, when it eventually picks a direction, it has the tendency to rocket. Because a lot of traders have buy orders right here. Because they know as soon as the price breaks this resistance or breaks this triangle, they know there's a high probability that the price is going to swing up very quick, very fast. So they want to be involved in it when it does. And guys, the same thing happens when on the downside. If it breaks to the downside, a lot of traders will have sell positions around this point here. If this triangle failed and it broke in the opposite direction and essentially took out this higher low, a lot of traders would want to get out of their positions at that point. But guys, I don't want to be bearish right now. I want to be bullish. I am of the mindset that we will continue the staircase pattern. We have good news coming out about the virus. Well, it's good news for the stock market, right? And if you have noticed, stocks like the airlines and the hotels, they had amazing days today. They were rallying on the Moderna vaccine trials, which apparently were positive. Now take it as you will. For the stock market, this is a good thing. So naturally, all the travel sectors and all the stocks that have gotten beaten up from the virus are naturally having a nice green day today. While on the other hand, the tech sector is kind of taking a breather again. Naturally, these were the companies that were rallying on news of, more lockdowns, higher infections, more, staying at home extensions and all that stuff. So yeah, Amazon's taking a breather, Facebook's taking a breather. You can see, like I said, this is not the time to panic. If you're in one of these stocks, still above this 20-day moving average. And just like with the S&P 500, buying at these points of reactions in the tech sector have proven to be absolutely perfect times to get into these companies. Same with Amazon. Look at that. Boom, boom, boom. Look how it's followed this trend. I mean, we're getting pretty close to it now. Facebook has literally bounced off the 20-day moving average, whereas Amazon's getting pretty close to it, And looking at Tesla, Seems like everybody wants a piece of Tesla at the moment, and I can definitely understand why. However, I cannot justify buying any stock when it's overextended like this on the RSI. So I'm just going to visually show something to you that might help, okay? So if we predict this moving average, it's going to go something like this. You can also see Tesla's price is kind of stabilizing around this region. Doesn't necessarily have to come down for you to enter another good position on this. It could literally just flatline for the next few days or like 2 weeks. And by that time, it would have already caught up with this 20-day moving average. And you know, in my mind, this would be a much better position to get into Tesla than like right here. Because we have that extra cushion, that extra support that has like throughout this entire rally, it's been pretty evident that it's been a nice support. And you know, by that time as well, the RSI most likely would have come down a bit. So take it as you will. Let's try things smart here, guys. Let's trade smart. Don't chase FOMO. Patience is the name of the game. If you want to be rich, you want to be wealthy. I am no wealth guru. I hate wealth gurus. I think they're full of shit and they lie to you. Guys, don't buy into their shit. Don't buy their programs. It's all online. It's all free. That's it for this video, guys. Thank you for watching. If you got value out of this, please subscribe. I drop consistent videos and I'm teaching a lot of people things that I had to find out for myself through trial and error. Remember, there's more to life than just stocks. Let's not get too caught up in it, okay? All right, peace out, guys.